Hello, everyone. Super excited to talk to you. I'm going to say good afternoon. It might be good morning, depending where you are joining us from. Maybe a couple people who it is good evening, and you already have your feet propped up on the couch and about to enjoy your weekend. Regardless of time zone, you are in for a treat. I am here chatting with Tim Mueller, ITX. They are a mergers and acquisitions marketplace. He may cringe. That may not be how he refers to himself. We'll talk about that in a minute. But we were chatting in the green room backstage about the changes that are happening in our marketplace, talking a little bit about the economy and the economic downturn. We're not allowed to say the R word anymore, the recession word. But like, how is that impacting mergers and acquisitions? What are buyers and sellers looking for today as opposed to 3-4 years ago? So plenty of things to talk about for the next 40-45 minutes. So first of all, let me welcome you, Tim. Thank you so much for your time. I appreciate it.
Jennifer, good to be here as always. Our second installment since we dropped an M&A marketplace into MSP Sales Revolution. And so we're just happy to talk about, really what we're seeing today in the marketplace, what you're seeing, and how some of your viewers can just be better educated as they contemplate the sale of their MSP.
I love it. All right. So I want to actually backpedal just a little bit because I want to talk about how we're kind of at the tail end of COVID. I think COVID is done or done-ish. And so what were you thinking and feeling going into the COVID, what I now refer to as the COVID craziness? What were you concerned that might happen? And then how did that all end up shaking out?
Yeah, nobody knew what to think about. I don't think anyone was really alive when the last worldwide pandemic hit in 1918. But we kind of battened down the hatches, and our whole thought was, survive and thrive is what we were thinking at the time. But it was really interesting what happened in the early part of 2021. Private equity firms and strategics, I think something clicked where they said, we're going to buy our way out of this, to see, how we can sustain our continued growth. A lot of shareholder pressure was on the strategic buyers to continue growing, both revenue and customer acquisition. And so 2021, ended up being a record year for us. And then that bled into 2022. So not knowing what it was, thinking we're going to survive, we couldn't be more, off than we were. And what the result was is that a lot of people who elected to go out to the market in 2020 and then stayed strong going into, the whole pandemic was really rewarded. And I think a lot of that same kind of intestinal fortitude can be applied as we start talking down a little bit later in the show about today's inflation and what we're seeing as a recessionary period, which we think will likely to kind of hint you ahead of time that we'll have a soft landing. So interesting times for sure.
Yes. So let's actually circle back a little bit because I referred to ITX as a marketplace, a mergers and acquisition marketplace. So in my mind, I kind of picture a virtual warehouse where you are stacking buyers and sellers and then kind of maybe playing matchmaker. Is that a fair-ish representation of what you do every day?
It does. So going back, ITX is now 26 years old as of this past January. And during that time, our firm has been involved in over 230 transactions. So a lot of skin on the sidewalk, if you would, of getting that many transactions done. And our primary role is to bring buyers and sellers together. That's really what the marketplace does. We've worked hard, Jennifer, on creating this data warehouse in your analogy of over 55,000 global buyers. And those buyers consist of private equity firms, strategic buyers that are much larger, let's say MSPs that are layering in smaller ones below them, family offices and things that are called search funds, where, let's say that, the vice president or CFO of a MSP was sold, and they, go out to the beach for a year, they get bored, they want to come back in, and they go out and find maybe a handful of investors that they want to buy just one business and then drop that former CFO or former president back into a role. And that is a search fund where they're able to do that in a one-off. And so we have really buyers from all those different flavors in our database. And so as we get to know our sellers, we then are able then to make specific matches based on, does the seller want to stay for 2 years, or does he or she want to exit quickly? Is it something that they want to be part of a much bigger organization so they could realize their vision for growth? So we really get to know our sellers and then put it in that database. And as you mentioned, we take the stack of buyers and the stack of sellers, and we start introducing them so they can to see if they can be aligned in their objectives and also in the seller's financial objectives.
So let me ask this, and I'm going to give you permission to defer the question if this is a trade secret. But if someone comes to you and says, hey, I'm looking to sell my MSP, they go on the shelf, the inventory shelf, if you will. How long do they typically sit on that shelf before there's a nibble, before someone says, I might want to acquire that company? Is there an average?
It's a good question. And so let me go back to a little bit of the philosophy of it, is that the longer a deal stays in play or in process, the more difficult it is to sell that asset. Even though it's confidential and no one is to know that that business is up for sale, the longer you're out there, the more there's a chance of your name getting out there. And that's never good. Employees start to get skittish if they think that their business that they're working for is being sold. Competitors sell against you. Don't sign that new 3-year MSP contract because these guys are up for sale. And then clients too, if they find out that you're up for sale, they may be a little bit less, apt to be able to sign that deal, that contract. And so the longer you're out there, the more difficult it is. So we work quickly. Our average deal takes about 7 or 8 months to do. So, a majority of 1 year, but it's very methodical. And we, put together the marketing materials, start the conversations, and let that kind of ruminate a little bit for about a month and a half, 2 months, and then we start getting offers in. Once a seller signs a letter of intent, that means that all the buyers we brought to them, one is still remaining. And so you sign that letter of intent, you go into a period of what we call exclusivity. And that is 65, 75 days, sometimes as long as 90 days, a period where neither the seller nor ITX can contact any other buyer on their behalf. So you go into exclusive period of time, and that allows the lawyers to start getting together in good faith to create a purchase agreement, to work through all the final nits and gnats of the deal. And exclusivity is fair because the fact is the buyer is spending money on attorneys, accountants to do their due diligence, and it wouldn't be fair if they're doing all that, but the seller still has the opportunity to talk with other buyers.
Sure.
So to answer your question, 7 or 8 months, we've had some that's gone as long as a year. And that might be where the seller may miss their numbers for a couple of months in a row, and they need to recover a little bit to show the trajectory is back up and to the right.
Got it. Okay, super helpful. Good. Because obviously most of the people stepping into this, at least when they're selling, have never done it before, may never do it again. And so there's a steep learning curve, I would imagine.
Oh, it is. And, that's what happens with these smaller mid-market firms, MSP Sales Revolution. We know that the reason we work so well together is that your target market of that smaller mid-market MSP and what we do are exactly the same. And so we know that the sellers have never done it. And so we both are able to have a boot camp that gives them coaching and allows them to understand the process more. But equally, if not more importantly, we have this whole repository of tip sheets that we give the sellers all along through the process. How to interview and look for a transaction attorney. What's the most important part of the accountant? Why do you go through exclusivity, right? Through due diligence. How to calculate working capital or adjusted EBITDA. And so those are things that we give our clients access to so that it lets them guide their way through this process, even if they've never done it before.
I love that. Yeah. And so one of the things I was going to talk about a bit later, but I'm going to move this up in order, is what to expect. So, most of the business owners are fairly busy. They don't exactly have a ton of time on their hands. So this is not an easy process. This is not, hey, let me download my P&L from QuickBooks for the last 6 years and I'm going to email it to you and call me when my check is ready. So what should the owners and the executives expect from a time standpoint, not in terms of calendar time, but in a typical week, how many hours should they plan to dedicate either during the day or in the evenings to making this happen and getting the seller, if they're looking to sell, getting the buyer rather, what that party needs to make a valid buying decision?
Jennifer, it's a great question because, as you go into this, most of these folks that you work with and we work with, it's one of the biggest decisions they will make in their career. The only thing bigger was probably the idea of either starting or acquiring that MSP to begin with.
Yes.
And the next biggest decision is when to exit. And so I would be remiss if I didn't be very transparent in this, is that the front end of it is the heavy load and lifting is from ITX, where we put the materials together, we take our 55,000 buyers and we narrow that down into a very targeted list of buyers that would then get the materials. But once the management meetings start and they start doing due diligence, it's a lot. It's balancing 2 full-time jobs for the seller, and even harder for these smaller mid-market firms because they may not have a CFO, they may have a controller, they may not have someone that they can at the ready to pull all the documents that need to be pulled. And so it is a difficult thing, because we're asking them, the sellers, our clients, to respond within 24 hours in some way, even if it is, hey, great question, it's going to take me a week to get that information, at least be responsive.
Yes.
But by the same token, there's a lot of materials that have to be done. So the importance of a good transaction attorney to really flank that seller is there. But we're also asking the seller not to hiccup at all in their sales or delivery process.
Yes,
we're saying
keep the momentum going.
Oh yeah, if there's a time in your entire career that sales and profitability need to continue to show that they're climbing, it's during that process. So on one hand, we're asking you to work very closely with the buyers, give them everything they need, but don't slip at all on the sales process. So for many of our sellers, outside of that first year of a startup, they'll often say it's one of the most trying times. But once they get over into the next stage, whether it is their clear line of sight to the beach, to be able to hang out and be done, or there's a clear line of sight to whatever is next, you might sell this and then move on to your next startup. Or if it is finding a prominent spot in the family photo of the acquirer, where you then become part of their management, at least you have that certainty when all the transaction materials and due diligence have been completed.
So what are some things for the MSP that is saying, you know what, I don't really want to get acquired for 3 years or 5 years or 1 year. Maybe they don't even want to submit their name for, another year. They're thinking, end of this year, maybe early next year, maybe that's when I'll start to consider selling. So it's on the horizon, but it's not a today thing. You already mentioned processes. So sales processes and marketing processes, having those documented and consistently executed on. What else are some things that MSPs can do today to lighten the load just a little bit when the transaction starts to happen?
Well, there are 2 things, and the one might be a pretty transparent promotion of your services, but to work with you to make sure that the business is in good stead, that the marketing, that the growth of sales is continuing. So we really, this is the stage where you're kind of getting in position to be in position for the sale. So to work with you to make sure that that's all lined up so that when buyers come in, they realize that the methodology is there, that they're really doing best practices. And that's where I think you come in to help them, whether you know it or not, you're helping them to prepare for the sale. But the other part, and we love talking with people 12, 18, even 36 months out, so that we can guide them on some things to think about with recurring revenue. And then as they start getting closer to going to market, we would suggest creating a confidential data room so that you could drop in your articles of incorporation, any
Ah,
kind of other legal documentation, and then looking back, at least 3 years in financials to start getting those prepared. And there's a misnomer too that I know a lot of businesses that you work with, Jennifer, are still necessarily working with QuickBooks. That's a perfectly fine back end for buyers to go in. It's become incredibly robust in the reporting that it can do. So the real question would be, meet with your accountant to make sure that your last 3 years in QuickBooks, the right categorization of services and the right way to put together kind of gap-like conditions for the financials are real important, so that when particularly those number crunchers come in and they start doing it, they realize that everything is in order from the accounting standpoint as well. I'd also look for any kind of succession planning, so that if you have a good number two, because the first question a buyer will ask one of your, and our clients is, let's say you're here for a year and a half, who then can take over and make sure the trains run on time and deliveries there? And so that if you have a good number two, that often makes you more seductive to buyers as they're contemplating the acquisition of your business.
oh, I like that word, seductive, more seductive. That's what you want. You want to be, it's
Yeah.
so interesting as sales focused as my clients are, like they're sales focused and marketing focused, to get clients to love them, to get more net new clients. This is flipping the table. They are now selling their company. So they need to be as attractive as possible or as seductive as possible. If we're going to steal
Right.
it. I like it.
But there's
Okay.
one thing I will
Yeah,
add
go
too,
ahead.
is that very few times will someone be both a buyer and a seller at the very same moment. You
Oh,
could
sure.
make the analogy of a marriage where, you're kind of buying in, but you're also selling your best features and qualities. And this is one of those periods where, while we all think that we want to put our best foot forward, the seller also has a lot of power to select the right buyer, because the fact is, most of our deals, 90+%, will have some type of earnout, meaning the next 12, 18, 24 months, the whole transaction value will not be paid at the day of closing. And so you have to trust that the leadership that you're folding your business into, that you're handing the keys over to, is strong. And so in that sense, you are a buyer during that process. You have to buy in on their vision, buy in on the stability of their management team, buy in on their shareholders or their investors, so that it does give you a better opportunity to get that earnout over the following 12, 18, 24, even 36 months. So I think that was just a note to know that it's not just how you sell yourself, but you have to also think clearly about whether or not that is the right buyer to associate with.
Yeah, you're buying their culture, you're buying their team, you're buying their reputation, and it's almost like you're blending families. So
Right.
yeah, that's great advice. Great advice. Okay, so you hinted at something early on, the so did I, the recession or the economic downturn. And I'm hearing rumors here and there that maybe it's not going to be quite as bad as the predictions were even 6 months ago. So what are you hearing on the whole economic front? And then how or is that impacting mergers and acquisition?
Yeah, so there's still a few things to remain that are not clear, but we're starting to feel as though this recessionary time will have a soft-ish landing. So it may not be as tough as we thought. Markets have been responding this past week. Wall Street, where there was some signs of a bullish market starting to reemerge. The Fed came out this week with a raising of interest rates of 25 basis points. So not as high as many thought it would be. And that's a good thing for us, because while the smaller mid-market deals don't require as much debt, it still is something that can slow down the buyers because the interest rates are so high. Not nearly as bad in the 1980s, where our parents were taking out mortgages at a 17% interest rate,
Yes.
for their homes. But for today's standards, it does affect it. So, but we're seeing too is that the larger deals in M&A, when you see all these statistics about mergers and acquisitions slowing down,
Yes.
Oftentimes you're looking at that $250 million deal, the multi-billion-dollar deal, because they do rely a lot on debt financing. So interest rates
Mm.
being higher will slow that down. For our space, and for many of the viewers here today, we'll call them smaller mid-market, under, let's say, 20 million in transaction value. We're seeing larger businesses swim downstream a little bit to make some of these little strategic add-ons where they might bring on 30 employees and maybe 10 million in revenue. So they have no trouble doing that with cash that's on their balance sheet. And so the debt is not as much of an issue for that. But, either way, I think the next probably 2 months in particular will be a strong, moment for us to figure out where the economy is going. But we started this year really strong with a good pipeline, and ITX is continuing to bring on new clients and get deals done. So we're still very bullish on the smaller mid-market M&A space.
So I know when we spoke a few months ago, you were mentioning that one of the key items that a buyer is looking for is that the company they are acquiring has solid systems in place, solid documented processes in place, a consistent track record of adding monthly recurring revenue every month. I want to take that in a little bit of a different direction. And I want to talk about specifically cybersecurity monthly recurring revenue. Are you seeing for the MSPs that haven't quite gotten their whole client base on board, all of their clients haven't adopted their preferred cybersecurity stack or their advanced security stack, et cetera? Are you seeing that impact valuations? And I guess conversely, for MSPs that have a heavy cybersecurity focus, they still have managed services, but they're heavy on the managed security side as well. How is that impacting valuations?
Yeah. So, if we talk about that word seductive, earlier I was saying seductive with a lowercase s. So in the security, that's an uppercase S, boldface, underline, partly because it's a white hot sector. It's something where resources are difficult to find, and to create a really strong cybersecurity team. A lot of MSPs, had pivoted from being an IT services firm to being more managed services, and oftentimes subcontracting all the cybersecurity work and not necessarily having it all under their roof. But as the MSPs that do bring it under their roof, the more they can have under contract that are cybersecurity, the higher the multiples will be. So, for instance, in our business, multiples for the transaction value MSPs is multiples of adjusted EBITDA. So your profitability. For cybersecurity, for the last at least 4 or 5 years, it's been a multiple of their revenue, which tells you how much more attractive these companies are. So the cybersecurity companies that are true pure plays, we're talking 95% recurring revenue, 1, 2, 3 year contracts with their clients. They were fetching 2.5 times revenue for their exit, whereas MSPs have been still strong, but more in that 7.25 to as high as maybe 10 times adjusted EBITDA. And there may be some outliers that are much higher because of, it might be geography, it might be the logos that they have of clients. It might be, more of a pure play where that MSP has 95% recurring revenue every year, so that they have positioned themselves as mitigating the risk for buyers. Because one of the reasons why recurring revenue is so important to a buyer is that you really do have to err a lot in order to have contracts to be canceled. Yes. And so a buyer goes in with a certain assurance that if you've got a 2-3 year contract with most of your clients, that gives them a runway. It gives them a couple of years to prove themselves that the acquisition was good, that the larger offering that they're making is good for that buyer base that the client base that the buyers have. And so that's one reason why MSPs, and then therefore the MSSPs also is a really good target for our buyers.
Okay, good insight. I appreciate that. What about the size of the MSP? So I hear a couple of different numbers bantered around, and then I hear people that vehemently oppose this position. So I want to get your opinion. I'm sure no matter what your opinion is, someone will disagree with you and say that you're wrong, but they're not the ones talking to me right now. You are. So I want to get your opinion. So I hear this magic $5 million figure floated around, that you can't expect to sell your MSP until you get to about that 5 million in annual revenue, regardless of pure play MSP, cyber, like whatever your revenue stack looks like. So is that the magic number at all? Like, is that the magic number that ITX prefers to deal with? Can we park there for a second?
Yeah, for sure. So, the sales guy in me that says we'll sell any company of any revenue if they want to exit, right? But I think that where that $5 million magic number came in was, where can you start to get the most attractive multiples? Because if it's a little bit of a larger company, they don't want to do all the due diligence and legal, and the transaction costs are the same if you're buying a $5 million or a $2 million or a $20 million MSP.
Mm,
And so they have to understand where their time is best spent to make the biggest impact when they make an acquisition. So, but if you've got a nice $10 million MSP, they're going to really be aggressive to buy a $2 or $3 million revenue MSP, because percentage wise, it does allow them to grow a lot, client wise, resources that are brought in. And so there still is a big market for those, we'll call them micro deals that we do. And those are usually deals that are less than $3 million. We have a little bit more of a relaxed process for them, meaning we don't do that full process where it's coaching and doing all the full service. We will list them and we'll get them introduced to a lot more buyers. But because of the fee that's associated with a micro deal, it's a lot less than if we're going to sell a $5 or $10 million MSP. So, to answer your question, 5 is a great number. And then the next big jump would be 20 million in revenue. So you do have that category of 5 to 20 million, where we have a real similar buyer base who, they know the drill, they know how to go in, do their quick look. If they make an offer, do some due diligence. And then once you get past 20 million, now you're looking at buyers that are typically $200-300 million in revenue and above to buy that $20 million firm. A lot more sophisticated. Now you're looking at perhaps even a KPMG that of that ilk that may want to buy a nice $20 million MSP or MSSP. So with those revenue sizes, as you had alluded to earlier, comes a different class of buyer as you go higher in that stack.
So you are exclusively helping the people that want to sell get acquired, correct? You're not transacting the other direction.
Yeah, about 95% of our work is what we call sell side engagements, where we represent the seller to find buyers. On occasion, we'll be working with, on behalf of a seller, we'll sell to a private equity firm or a strategic, and they'll say, God, we love working with you guys. You seem to know everybody in the industry. Can we hire you to kind of find that needle in the haystack? And they'll give us the imperative, like, we want someone that's in the East Coast. We want, 30 employees, we want whatever it might be. And then we'll take what we call a buy side engagement, and we'll go and find that. So we'll take a monthly retainer and try to bring candidates to those buyers. For reasons that you could probably calculate, it's much easier for us to sell to a much bigger known buyer base than it is to go and find sellers that have not yet put a shingle out saying that we're for sale. Right. And but oftentimes we'll go in our database, and as you might imagine, we're talking to prospective sellers all the time. And we then put it into our database so that we can run some numbers and say, hey, this great MSP in the Chicagoland area has said, they would talk to somebody if it were, a one-off, but they're not willing to go through a whole process. And that's typically where that buy side engagements allow us to go to those one-offs and see if they'd like to sell.
So we've got time at least for one more question. So you've mentioned this term a couple of times, and I want to dig into it a little bit. A transaction attorney. Now I can guess what that is. It's an attorney that specializes in M&A, but how does one select the best attorney for that? I'm sure you have a database of people that you recommend, but if you came to me and you're like, here's three, go interview them or go meet with them, what should I be looking for? What are the success criteria? Like, is it just, do we have a personality match, or is there a little bit more to it than that?
It's interesting that you bring this question up, Jennifer, because as a seller puts together their team, and they do, like everything else in life, you should have a team of things, of people and resources to help you through, particularly if you're a neophyte and have never done that before. Transaction attorneys are one of the most important parts of the team, period. So you may have a business attorney. He or she may have done your operating agreement, or they may have done some things for NDA disclosure, things on that line. They are typically not the best candidate to be your transaction attorney. What you want, and because it's one of the biggest decisions you'll make, right? You're not going to have your general practitioner do heart surgery on you. So you want to make sure that this attorney has done tech deals that look a lot like you. They want to make sure that, we prefer for these smaller deals, either regional firms or kind of sole practitioners, while the Jones Days of the world are incredible law firms, top 5 in the world. For these smaller deals, A, they'll cost a lot more, and B, partially because of their process, they may complicate the deal beyond the simplicity of what that is. And so these regional or sole practitioners, they can dig in right away, get the deal done, and make it simple for the seller, not to overcomplicate it. You want to make sure that they've got the capacity to get the deal done, particularly if it's a smaller firm. They may be the best at what they do, but ask them about their pipeline and how many deals they're working on right now and how many they can hold, so that you aren't, on the back end of their list as they're getting through this. You want to ask them about their fee structure. Some will do a straight hourly fee. Some will cap it and say, we will not charge more than $90,000 for the deal, or whatever that cap might be. So get to know their fee structure on how they do charge. And in most cases, the smaller deals, unless there's a major complication, for example, you have a federal contract business, and there's complications signing over all those contracts to the buyer as either a female business enterprise, minority business enterprise, or just a certified vendor to the federal government. And so oftentimes the deal attorney has to help those get signed over to the buyer. Those are complications that for a set fee might be over and above, but typically the attorneys that we see that say, we're going to give a ceiling, they honor that.
Okay.
And you're right, we do have a list of a number of attorneys that we've worked with that, we don't have a dog in the fight. We don't get remunerated by any of those for making the representation, but we know that it helps our clients if we can refer some really solid transaction attorneys who've done deals like this in the past.
Okay, I was about to wrap us up, but I remembered something crucial that we need to go through. So I want to drop the link. Give me a second. The challenges of trying to multitask. So we led into this saying that essentially in my mind, what ITX is doing is creating a massive warehouse of buyers and sellers, and then playing matchmaker, which we're not quite at the Valentine's Day season, but that feels really good. Like you are like a modern day Cupid. And so so if you want to put your name into the warehouse, that sounds like horrible, like add your name to the warehouse. But if you are at the point that you're thinking about becoming on the market, you want to sell in the next 6 to 36 months, 6 to 18 months, something in there. I just dropped my link in the chat. And if you're watching this on replay, it'll be in the show notes inside of the YouTube channel. Submit your information. The ITX team will reach out to you, have a conversation, let you know what kind of free resources they have, what kind of paid resources they have. Just have a conversation, start the relationship. This is not a heavy sales pitch, but like Tim was saying a few minutes ago, it's important that you start to build your bench now with transaction attorneys and with teams like ITX that can be behind you and make this transition a little bit easier, because it is a bit of a heavy lift. For most of you, you're never going to do this again. This is probably the first time you've ever sold an MSP, let alone sold any business. And so the ITX team is there to support. So you've got my link inside of the show notes. Any last thoughts? I feel like we've covered a ton in the last 45 minutes.
Yeah, well, first of all, thank you for bringing us onto your program, and happy to do it anytime you want to do an update or understand where the market's going in another few months. I will say that, to make sure there's no confusion, you'll see the logo right here for Martin Wolf. Martin Wolf is the parent company. ITX is the offer for smaller mid-market firms like the MSP Sales Revolution customers and viewers that are there. So I just want to clarify that. And then secondly, I would say, you run a fine balance of run your business as though you're never going to sell it, meaning make your investments as you normally would in your back end, your sales, your marketing, your staffing. But on the same token, for the other 50%, run it as though it's going to be sold. So make sure that the records are, due diligence proof. Make sure that your, operating agreements and all your legal papers are up to date. So it's really the kind of that balance between the two, and you'll be just fine. So Jennifer, thank you for today. It's been great.
Amazing. Great words of wisdom. I appreciate it. I agree. We're going to have to do this because I think the market is changing relatively quickly, and it's important to stay on top of it and adjust as needed. So we'll do this again soon. Thank you so much for your time. I appreciate it.
Thanks, Jennifer.